What's good, YouTube? It's your boy Michael. Welcome to MC90FX. Yes, welcome to another analysis for the week. But I don't want this to be like an analysis. Today, I'm going to expose my intersection liquidity theorem. This is the best video you will ever see. If you want a step-by-step method of always looking at the market every day, this is the video you need. Now let me go over the trades I've took before, last week trades. You can check my trying to get funded on a 50k profirm account, which I'm currently trading. You will see that I took all those trades, my losses and my win. Let me go over my strategy. This is the strategy, the intersection liquidity theorem. This is what I call the strategy, and it's not me that formed it. I actually learned it from this SMC trader, which is Dimensional Capital. Now I'm going to be explaining everything for you. Last upper week we saw how price was consolidating around there. Then we saw a sweep of this liquidity. Like we saw how price was consolidating around there, and we knew that fair value gap. Look at the fair value gap that was there. We knew that market wanted to collect this fair value gap. I knew that market wanted to collect this fair value gap to tap into this other block to buy from. You can see I have a set limit to buy from this other block. Why did I say so? Because I believe price is bullish. Price is bullish. It broke the previous structure high. Now it has come back to come and collect the internal liquidity before it goes to the upside. Now price consolidated for a while on the 50% region level before it broke down into the displacement of the 70% level. It has not still finally tapped everything, because you can see the other block, and this is where price got to last week. You can see we are still having some fair value gap to 1.08200. Now let me show you how I look at my intersection liquidity theorem per month. I said per month, per day. So first of all, I go to when I have a bias through market structure and daily draw on liquidity. Like I know that the market is actually going up. I use market structure and daily draw on liquidity. Daily draw on liquidity is just to see how your candle close. For instance, if you see that, okay, on a bullish day, you see that after this bullish run, look at this candle, it closed up. Then the next candle opened where it closed, and it closed above it. It signifies that the price wants to continue going up. You understand? Look at when price went down, closed there. This one took the liquidity and closed above it, above the wick. It shows that prices want to continue going bearish. You need to understand that daily draw liquidity. Then combining it into market structure, you can 90% prove where market is going to, especially if you understand internal and external liquidity. No, my babe. So as I was saying, now let me show you the trades. I usually do my entry on 15 minutes or 5 minutes, but let me show you the breakdown on the 5 minutes. Now this is how every day I look for trade setup. My indicator is always on. I call it the Asian high and low indicator, Asian session high and low indicator. Yes, that's the indicator. You can turn it on. Now I trade only on London each session. I look for my entries on London session. We have done our daily buyers, draw on liquidity, and what I call it market structure, and we know that market is going down. Now this is what I look for every day. Now I wait for London open, just like this. Now this is the Asian range, accumulation, manipulation to the upside, then distribution. Now this is what I look for every day. Now I know market is going down, so what I look for, I always wait for the Asian session high to be swept. If market is going down, you wait for Asian session high to be swept. If market is going up, you wait for Asian session low to be swept. Now what if market is going down and the low is first swept? Now we have two types of entry. We have the change of character entry and the candle entry, ejection wick or engulfing candle. Now in the case whereby when market is going down, instead of the high being swept, the low is being swept first and is being displaced. After the low, liquidity has been swept and the market displaced into the opposite direction. That is manipulation. Now I will usually enter from after I see an engulfing candle. You can see After market displays to the kidney, how do I know that market is ready to sell after the displacement? It's because I saw this engulfing candle. After this engulfing candle, I saw this one again. Then I entered after this candle close, or you can enter after in the middle of the 50 displacement level. You can see it retrace, but I entered after the engulfing candle close. On the 15 minutes, you see it like it's just a whole candle to the downside there. So that's entry. So this can give you consistent what it can give you consistent 1 to 3. This is 1 to 3, as you can see. You can see that finally price came to sweep the Asian high. It displaced down. Understand? It displaced down, but you could have missed this trade because it didn't retrace to the 50% level. Now let's go to scenario 2, day 2. Remember, our market structure and our daily draw liquidity says that market is going down. Now London session open, sweep of the liquidity, London low, and market is going down. So what we have to do is to wait for confirmation. Now after it sweeps the liquidity, it displays up. After it displays up, you just calm down, keep watching. You know, it goes up here, it retraces here. Why did I not enter from here? Because I did not see any confirmation. What's my confirmation is what I call it engulfing candle. There's no real engulfing candle here or ejection wick here, so I still hold on. You can see it still went up, making structure as if it wants to go up. Immediately look at what I call engulfing candle. Look at it here. When it got to this place, look at this candle. This candle covered all this. Then I know that, oh, Baba wants to come down. Then I saw the way the next candle was printed. Then I entered at the fair value gap here, and you can see market retraced to the fair value gap, and it went down. This is what we call 1 to 3 out. Now the next day, remember our daily bias is still, and our market structure is still pointing to the downside. Now how can we enter the daily trades? As usual, we wait for London session to open. London session opens, it sweeps the liquidity. When it sweeps the liquidity, it displays up. After it displays up, you can see, look at the next engulfing candle. Then what I do, I enter the engulfing candle, put it there. Our stop loss is usually 10 pips. Consistent stop loss of 10 pips and targeting 1 to 3 out. You can see 1 to 3 out smashed. Remember, we are still going down. This is a day whereby there was a loss. As you said, not all trading style is 100% profitable. You can see here, market swept liquidity. It didn't really displace. I'm still holding on. It later swept the liquidity low, that it has swept the liquidity and displaced up. Okay, what am I waiting for? I'm waiting for what? Engulfing candle. Now market showed me this displacement. Okay, I think it's an engulfing candle because we're already to the mid time, but I should have not entered this trade because why? It has passed what? My London session. When market swept the Asian low and the London low, understand? This was not my trading plan, but I still entered it and I have a losing trade. Now you can see why I say we trade it only London session. We start looking for those entries within 8, 9, 10, 11, 12. If you don't see it, you don't enter. Look at this scenario now. Price was taking time. It did not sweep any of this low. When it swept this low here, it was already 130. You can see it's already 130. In London, it was already 12:30. So that was ending of London session. And my trading plan says what? It must be traded on London session. You see that it didn't work in New York session. Sweep of the low, displacement to the upside, then it showed the engulfing candle. We entered. You see, market just rallied to the upside. Then we had a loss there. Now our anticipation is to sell because there's liquidity in the bottom level. You can see when London session open, sweep of liquidity, we saw a displacement to the upside. After the displacement to the upside, you can see that there was an injection candle. This was called an injection candle. After I saw this injection candle and I saw this 3 prints, 1, 2, 3 candle, understand? After the injection candle, then I entered after the injection, the engulfing candle. After the injection candle, I can see price went in and you can see 1 to 3 out smash. So the next trade again, this was my trade on Friday, which I had a loss. of 0.5% in my funded account, 50k funded account. You can check other video, you can check the video on everything. You can see market swept the liquidity. Market swept the liquidity, it displaced to the upside. Then after it displaced to the upside, it showed an engulfing candle. Then I entered at the engulfing candle. Then you can see market consolidated before I was stopped out. So not every trade will win, but with this you can find consistent trades. Now what am I looking at forward? What am I looking forward into next week? So I've explained my trading for you. What am I looking up for next week now? You can see the way market closed. Now you can see there's one point of interest here, there's another point of interest here. Yes, some people will say this point of interest here is not valid, but if you go to the 1 hour, you are going to see an order block there. But 4 hour order block or 1 hour order block, which one is stronger? I will say 4 hours order block is stronger. But this order block here is at the equilibrium, is at the 50% region level. Price may not necessarily move to this other block here, which is at the 70% or 60 point something percent region level. Let's pick our fib. How did I know this? If we pick our fib from this high here that the markets fell from this high here to this low here, you can see that before price started rejecting, you can see that this other block here is at the rangely at the 0.5 to 0.61 region level. Understand? So you can see that price wants to go up to that place. I know. Now how will I look at tomorrow trade setup now? Look at the way this candle closed. This candle swept this previous high and is bullish to the upside. I will wait for a pullback to buy into this zone, maybe just 1 to 2 hours. Understand? Just 1 to 2 hours, because it's a short-term trend. Now I have an entry here at 1.0900. This might not hold because it might go and retrace to this other block at the top here. Understand? But I'm still going to try it because I'm going to break in 0.5%. Understand? Why did I think this place might hold? Because it's at the equilibrium level. Let me show you another indicator which I use. You can see on the 4 hour here. You can see on the 4 hour, like previous week high. Listen, previous week high. It broke this high range from here. This high broke all this low, sweep all this liquidity to the downside. So this might not hold, but I will just try it. Maybe this is like 1 to 2. Understand? The overall is to go down into this place. So what am I going to look for during a session? I'm going to look for a manipulation to the downside, then sweep the liquidity low or the high and find a way to trade it to the upside. Until price comes to this place, I'm not starting to sell anything. Let me go to the 1 hour so you see what I'm talking about. So we can see that. Look at this other block here. When price displaced to the downside, there was an other block before this pull back to the downside. You saw that last week price just retraced onto this place here, previous daily high. Now you can see there's a tiny fair value gap here before this other block. So that's why I'm trying my 1 to 2 hour trade here. I'm trying my 1 to 2 hour setup trade. Let's see how it's gonna go. Stop loss tight, everything tight. So if this supply zone don't work, our next target is what? This. Because we can see fair value gap here and we can see the other block here. I'm entering almost like in the middle of the fair value gaps and putting my high at the top of the other block. So it's a trade scenario. But this one are just limits. Then all those criteria that I just explained are way to enter. Like now I am thinking that market is going to go bullish. I want to, when market open, I'll watch the Asian session, then I'll wait for the low to be swept or the high to be swept, then see my entry criteria that I've shown you around this region here to either buy to the upside. Until price gets into here, I will never think of selling. So when price gets here, maybe it's the next day, or it breaks throughout here, or it starts rejecting from here, is anything. And if we look closely here, this is like a textbook setup trade. Market break structure, it retrace, understand? It retrace. When it retraces, this place is called inducement. Many people want to sell from here, but they forget that there's an order block here in which price will sell from. Okay. Let me pick my Fibonacci from this high here, to this low here. You can see that place, price has swept into the 50%. It peaked, but that order block is sitting roughly at 0.61 to 0.71 retracement level. So I believe price can sell off from this order block here. So that's what I believe. If this place doesn't hold, then we are going all the way to this place. But I can take advantage to buy the market to the upside from looking at my intersection theorem liquidity concept, which I just explained at the beginning. So thank you for liking and staying to the end of this video. This is everything I trade. Don't forget to like, subscribe, share this video. Peace out.